Welcome back, and now to money market and fixed income. The overnight lending rate expanded by 83 basis points to 8.3% in the absence of any significant funding pressure on the system. Trading in the Treasury bill secondary market was bearish as the average yield expanded by 3 basis points to 4.0%. Now, across the curve, the average yield expanded at a short and mid segment as market participants sold off the 78 DTM and 141 DTM bills respectively. The average yield closed flat at the long end. Elsewhere, the average yield remained flat at 4.4% in the OMO segment. Activities in the Treasury bond secondary market were mixed, although with a bearish tilt as the average yield expanded by 1 basis point to 11.1%. Across the benchmark curve, the average yield expanded at a short, that's plus 3 basis points, and as investors sold off the January 2026 bond, but then closed flat at the mid and long segment. Now, this is what's happening there. But of course, we'll be joined by John Kanayo, research and strategist, Imperial Asset Managers Limited. He'll help us make sense of what transpired at the market. Hello, John. Good to have you on board. Good morning.
And good morning, everyone. Good to be here once again.
All right, now let's talk about what happened yesterday. The overnight lending rate expanded by 83 basis points to 8.3%. And this was in the absence of any significant funding pressure on the system. What does this mean exactly?
There was a funding pressure in the system yesterday. At the NCB market, CBN was in the market yesterday with open market operation was 167.22 billion. And
John, I didn't get you correctly. Did you say there was funding pressure? I didn't get that.
Yes, I said there was funding pressure yesterday because CBN was in the market with NCB auction, which depressed system liquidity, and as such, what we saw was overnight rate going up by 83 basis points, to settle at 8.33%.
Okay. Yeah, well, say, what does this mean?
What does this mean?
Exactly.
Okay. When system liquidity is high, what we usually see, money market rates coming lower because we have there are more funds available in the system. But when you see system liquidity coming lower, we usually see money market rates going up.
Okay.
Did you get this?
Yes, sure. Now, let's look at trading in the Treasury bill secondary market. I mean, we saw that it was bearish, but then average yield expanded by 3 basis points to 4%. Now, how would you describe this activity?
What happened in the Treasury bill market yesterday was obviously investor anticipating that since CBN will be in the market for PME or primary market auction, they were looking at that CBN will repeat what it did a fortnight ago by pushing spot rates up. If you look at, we saw sell-off on August 2022 and November 2022, and if you do do a simple arithmetic work on that, that should give us that should put it into 182 day bill. And because the investor actually anticipated that the CBN may probably push spot rates for 182 bill up, what they did was they sell off this very position, hoping that they could enter through the primary market, entering into a yield that into maturities that offer a better yield. But at the end of the day, I think that hope was largely dashed because CBN actually dropped the 182 bill maturity by 5 basis points.
All right, now elsewhere, we saw that the average yield remained flat at 4.4%. That was in the open market operations segment. What, in your opinion, led to this?
Yeah, you're talking about bond market now?
The open market operations, we're looking at, the average yield which remained flat in the open market operations segment.
Yeah. In the open market, average yield closed flat, or the market remained flat. It's been flat for a while, obviously because the system liquidity has been trending low, and the fact that the yield space in this market has been significantly low. I think there wasn't any yield that pushes compelling attraction to market participants. It's been trading flat for since the beginning of this very week. Like you said, it traded flat, and the average yield today is at 4.02.
All right, let's look at the activities in the Treasury bond. The secondary market now, we saw that activities there were mixed, and though it had a bearish tilt, as the average yield expanded by 1 basis point to 11.1%. Is there anything likely to change in the coming days?
Yeah, there is something likely to change here. Market is largely waiting for the both PMA scheduled to hold on the 20th of June. If you look at the market has been anticipating this would be the first PMA that will be held after MPC decided to push MPR by 150 basis points. Market is largely expecting that PMO is going to push rate across the three benchmarks that will be offered to the market, basically all by between 25 to 75 basis points across the three benchmarks, three tenures that will be offered to the market. If you look at, we have seen between Monday to today, the market has been largely either it was mooted on Monday. On Tuesday, it went up by 2 basis points. Yesterday, it was up by 2 basis points. Yesterday, it was unchanged, like you have reported. And what has been happening is that system liquidity has not been that significant to push demand. And so what we have been seeing is that it's been from flat to a little bit upward, and yesterday we saw another flat.
All right, now let's I think we should just wrap it up now with your outlook for today.
Okay, for like I have mentioned, system liquidity is still low at 122.49 billion. If you come into Omo market, we expect Omo market to remain flat, obviously because of low system liquidity. At the NCB market, because some bids were not met yesterday, we expect unmet bids to flow into the secondary market. So we might see a little of demand, especially at the mid and long end of the curve. The bond market is expected to remain relatively low. There will be demand, of course, there will be demand and there will be sell-off, but at overall, average yield is expected to remain either low or unchanged. As market continue to anticipate, to wait for the fund PMA expected to hold, like I said, on the 20th of June.
Thank you so much, John Kanai, for coming on the show and for sharing your thoughts with us.
Thank you, Petra, for having me, and thank you, everyone.
All right, do have a great day. And now to the top business stories. We start with the manufacturing companies. Manufacturing companies have disclosed that they are unable to access loans at the Central Bank of Nigeria's 5% lending rate under its intervention scheme for manufacturing and other critical sectors. According to them, the loans have structural framework issues and are inaccessible in banks at 5%, adding that banks were more open to giving manufacturers loans at their official market rates. Chairman of Manufacturers Association of Nigeria's Electrical and Electronics Sectoral Group, Mrs. Ijoma Oduonye, said efforts made by her firm towards accessing the intervention funds through one of its designated commercial banks had proved abortive. Furthermore, Chairman of the Manufacturers Association of Nigeria's Gas Users and Executive Director of Hafer Industries, Michael Oladebayo, disclosed that the structural framework of the CBN intervention leading has complexities that limit manufacturers from accessing them through the designated commercial banks. Recall the CBN agreed to keep interest rates at 5% per annum for critical sectors and manufacturing industries until March 2023. Commercial banks in Nigeria have executed interest rate hikes for loans, raising rates by as much as 200 basis points, that's 2%. The interest rate hike is in response to the recent increase in the central bank's monetary policy rate, that's the MPR, which was jacked up from 11.5% to 13%, a 150 basis point increase. Interestingly, the MPR is a benchmark rate used by the Apex Bank to lend money to commercial banks in Nigeria. Banks often add a premium to the MPR when setting interest rates for their borrowers. Furthermore, the interest rate increases are also with immediate effect, giving customers no choice but to plan ahead or look for alternatives to fund the interest rate hikes. The latest data from the CBN indicates the prime lending rate was 11.8% in April, while the maximum lending rate is 28.79%. It is expected that the rates will increase by at least 2%. The federal government has stated it will sanction oil and gas companies that do not comply with the human capacity development provisions contained in the Nigerian Oil and Gas Industry Content Development Act. The Executive Secretary, Nigerian Content Development and Monitoring Board, Simbi Wabote, made this known while delivering a keynote address at the second edition of the Virtual Stakeholders Workshop for Human Capacity Development in the Nigerian Oil and Gas Industry. Furthermore, the NCDMB chieftain warned that the board would enforce periodic forensic audit for HCD programs and companies found contravening the NOGICD Act 2010 and the ministerial regulations in executing cost-intensive capacity development initiatives as mandated by the Act would be sanctioned. In addition, he said that the board was mandated to ensure that the industry optimized the benefits from huge investments and also ensure beneficiaries of the HCD training programs find gainful employment in the sector. And finally, the National Identity Management Commission, NIMC, also known as NIMC, has revealed that at least 10.3 million Nigerians have been issued national identification numbers in the first 5 months of 2022. This brings the total number of Nigerians with NINs to 82.73 million as of May 26, 2022. The data on the NIMC's portal showed that as of January 1, 2022, there were 72.7 million Nigerians with NINs. It added that the number of unique NIN grew to 75.36 million as of February 2021. 77.1 million unique NINs were recorded as of March 21 and 80.7 million as of April 23. Director General of the NIMC, Aliyu Aziz, recently disclosed that NIMC issues an average of 2 million NINs per month. According to him, the Commission has the capacity to issue about 3 million NINs monthly. He added that the present capacity of the agency could accommodate only 100 million Nigerians. And that's about all we have of the top business stories. And still to come after the break, World Bank warns of stagflation amid slash of global growth forecast to 2.9% in 2022. Well, that's a focus next after this break. Please stay with us.